Are you looking for a fund that can adapt to different phases of the market? Could the new Bandhan Business Cycle Fund NFO be the key to boosting your investment portfolio? Let us explore the answers by conducting an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial decisions and investment decisions to reach your financial goals more faster and smarter. So, before analyzing whether the Bandhan Business Cycle Fund will be a good fit for your investment portfolio or not, let us find out a few basic details about this NFO to better understand it. So, as an NFO, it starts on 10th September 2024 and ends on 24th September 2024. And some of its key features are it belongs to the category of thematic equity scheme of business cycles, and it is an open-ended fund type which has Nifty 500 TRI as its benchmark. And also the minimum amount you need to start investing in this fund is just 1000 rupees, and the fund managers for this NFO are Mr. Vishal Biraya, Mr. Harshal Joshi and Ms. Ritika Behera. There is no entry load for this fund, but there is an exit load which is 0.5% if you redeem it within 30 days of investing. So these are some of the basic key features of this policy. Now let us move on to understanding the investment philosophy and the investment objective of this fund. So the investment philosophy is to aim to invest at different stages of business cycle in the economy. So what is the investment objective? That is to provide investors like us with long-term capital appreciation by focusing on riding business cycle through dynamic allocation between various sectors and stocks at different stages of the business cycle in the economy. So this is the basic investment objective and philosophy of this fund. Now, as we have understood a few basic details about this NFO, now let us move on to analyzing whether this will be a good fit for investment portfolio or not by analyzing the pros and cons of investing in the Bandhan Business Cycle Fund. So first, let's start with the pros. One of the major advantages of investing in a business cycle fund is the flexibility across cycle. So this fund has the ability to adapt to different phases of the business cycle. Whether the market is expanding or contracting, the fund strategy aims to shift focus to sectors that are likely to perform well during each phase. This flexibility can help manage risk and capture growth opportunities. Another advantage is the diversification. So by investing across various sectors and themes that aligns with the business cycle, this fund offers diversified exposure. So this can reduce the overall risk in your portfolio as it isn't overly reliant on a single sector. And it also has experience management because Bandhan Mutual Fund has a team of seasoned professionals who understand the nuances of the market cycle. So their expertise can also be a key factor in navigating the ups and downs of the market effectively. So it also has potential for outperformance. Like if managed well, this fund has the potential to outperform traditional equity funds, especially during volatile or uncertain market conditions. The focus on cyclical trends can help tap into sectors that are poised to benefit from the economic shifts. There is also long-term growth focus. So this fund is designed for investors who are looking for long-term capital appreciation. So by staying ahead of economic trends, it aims to deliver consistent returns over time. So these are some of the major advantages of investing in the Bandhan Business Cycle Fund NFO. Now let's move on to discuss about the potential drawbacks, that is the potential disadvantages of investing in this NFO. So one of the major drawbacks here is the market timing risk. So while this fund aims to capitalize on the different phases of the business cycle, timing the market correctly is challenging even for a professional. So if the timing is off, it could result in missed opportunities or losses. You need to remember this. This is a very important factor. And also another thing about another drawback here is that the sector concentration risk. So during certain phases, the fund may have higher exposure to specific sectors. So if those sectors underperform, it could negatively impact the fund's returns. So this concentration can increase risk compared to a more broadly diversified fund. There is also you need to consider the active management cost. So given the active management and sector rotation involved here, the expense ratio of this fund may be higher than that of passive index funds. So over time, these costs can eat into your returns. There is also an uncertainty in an NFO performance. So as this is a new fund offering, which is the NFO, there is no track record for us or a data to evaluate this fund, right? So investor must rely on the fund strategy and management team without seeing how it has performed in the past. So that's kind of taking like a blind risk instead of taking a calculated risk. We need to know how much risk we are taking here, right? But without a proper data or track record for us to evaluate with, it will definitely result in some kind of blind risk only. And it is also not ideal for a short term investor. So if you're looking for a quick gain or a short term investment to achieve your short term financial goals, this may not be the best choice, because the fund strategy is more aligned with long term goals rather than a short term period, because already in short term period market is highly unpredictable. So investing for a short term period in this fund might be more risky, and it may take time for the benefits of this cyclical approach to materialize, only if it's for a long term period rather than a short term period. So we also need to consider these drawbacks carefully and then choose to invest in this fund. So if you think about the takeaway from our pros of investing in this fund, this business cycle fund, especially if the new trend and emerging sector performs and delivers, it can definitely boost the returns in your investment portfolio. But you need to understand it applies the high risk and high return concept. So the higher risk you take, the higher return you might get. So that's why it might be suitable for an aggressive investor who are bullish on the different investing in the different stages of business cycle in the economy between various sectors and stocks. So this is what we can get from the pros of investing in this Bandhan business cycle fund NFO. So if you choose to invest in it, you need to stay for a longer period of time, and you need to be an aggressive investor to take the higher kind of risk for the potential higher returns you can get from this fund. So another thing you can take from the analysis of the cons of investing in this fund is that there is a higher concentration risk, right? Because it only focuses on the business cycle theme. So even though it invests in the various sectors or stocks or themes like that, it only invests according to the business cycle fund, engaged businesses which are engaged in the business cycle fund. So that makes it a high concentration risk. So if this new trend and emerging sector underperforms in the market also, it will definitely impact the returns in your overall portfolio. So to invest in a fund like this, the timing and the circle of competence should be on our side. So as we can see from the pros and cons, this is the takeaway we can get from it. For pros, it's for a longer period of time and you need to be able to take a lot of risk. For the cons, it has a higher concentration of risk. So if it underperforms, it will definitely impact the returns in an investment portfolio. So to invest in a business cycle thematic fund like this, the circle of competence, the market timing should all be on our side, which is harder to predict even for a professional. So we need to consider all these factors before choosing to invest in this fund. Now, what is the final takeaway from this analysis? So, as we can see, this is not a beginner friendly fund for you to start your investment journey in. Like, suppose if you're a first time investor, even if you're a conservative investor who's not willing to take a lot of risk, then this fund might not be suitable for you and you should avoid investing in this fund. And rather, you can invest in other existing business cycle thematic funds with a proper track record of at least 7 to 10 years, where you can analyze how this fund has performed in the highs and lows during the period of the entire market cycle, because in 7 to 10 years the market cycle would also get completed. So you will be able to analyze properly and you will have a proper track record. So investing in an existing business cycle thematic fund with a track record is taking a calculated risk, but investing in an NFO like this is taking a blind risk. So you need to consider that. And also, if you're looking for funds to add to your core investment portfolio to achieve your main financial goals, then this fund, NFO like this, might not be suitable for your main investment portfolio, because we are yet to know how it is going to perform. We do not know what kind of risk we are taking. So if we choose to add this to our core investment portfolio and it underperforms, it will definitely impact the returns in your investment portfolio as well. So it's better if you choose to not to invest in this fund and add it to your core investment portfolio. But if you still want to invest in this fund just to see how it will perform in the market, just to see how it will perform later on, then what you can do instead is you can if you have surplus money, that is, you can invest it through a satellite portfolio with a minimum investment amount on a trial or an experimental basis just to see how it will perform. And later on, when this fund performs really well over the years, you can increase the investment amount according to what you see fit. So you can do like this. Instead of investing it on the get-go in your investment portfolio, main investment portfolio, it's better if you invest it through your satellite portfolio on an experimental basis with a minimum investment amount. So that is something you can do. And also another important thing to consider is that if you do not know when to enter and exit from a business cycle fund, it's best if you avoid investing in this fund itself, because even for a professional it's very hard to navigate and also to predict the market timing. So if you do not have complete knowledge of the market or how to enter and exit or when to enter and exit from a business cycle fund, then it will not be suitable for you. Because to maximize the potential gains you can get from this fund, you need to know when to enter when this theme is very highly performing in the market, and exit before it underperforms. You need to time the market, you need to know how to time the market. So if you do not have that kind of knowledge, it's better if you choose not to invest in it. And also if you're still struggling with investing in this or not, or if what will be a better investment option for your investment portfolio, first of all, this is completely up to you, like what kind of investor you are and what kind of funds you want to invest in your investment portfolio. But if you're struggling to decide on that, it's better if you get some professional guidance through a certified financial planner who will be able to look at your investment objective, the risk profile of your investment portfolio, like what is your risk tolerance and what is the overlap ratio between your investment portfolio and the investment portfolio of the fund you want to invest in, and what kind of allocation you want to give this fund to your investment portfolio. So they will be able to look at all these factors and personalize your investment portfolio with better investment options that will be suitable for you to achieve your financial goals in a more faster and smarter way. So investing through professional guidance like a professional financial planner will be helpful for you in the long run and will also make your investment journey hassle free. So it's for a better financial future, you can definitely invest through a professional guidance as well. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.